In yesterday's video, I explained that I'm remain bearish on the stock market until and unless the buy the dip crowd and the bulls take the SPY all the way to the levels of 322 or 323 and close above it. I also explained to you that I continue to buy the VIX, specifically on dips like we saw today morning. And I told you that I will short the rip or sell the rip in garbage stocks. These are the gambling crowd's favorite, the airlines, the cruises, the casinos. So let's see how the market developed today. The futures popped big time because of positive headlines that we saw overnight, mainly the infrastructure spending, or they just remember that they have to spend on infrastructure now. $1 trillion proposed spending on infrastructure. Of course, that's not going to happen. It's not going to pass Congress right now. It's just too late. But it gave a lot of people positive outlook to buy the futures and buy the construction stocks like CAT. We also saw another headline, positive headline, about a vaccine treatment or a steroid treatment that was effective in the UK against the coronavirus. We've seen these headlines and they last for a couple of days, couple of weeks, and then they throw cold water on them, so I don't take them seriously. But a lot of futures traders, they put a lot of stock on these headlines, the vaccine headlines, and they buy the futures contracts. We also have the announcement from the Fed from yesterday that they will buy individual corporate bonds instead of the ETFs. On top of that, the retail sales today, the numbers, came out as the highest ever, up 17%. And it was celebrated. Certainly the president tweeted about it, and everybody took it as a bullish indicator for the economy. But we're still down 6% year over year. However, the headline that caught my attention is a negative one. It's the re-emergence of the coronavirus in Beijing. They're closing schools, they're closing travel to Beijing, and that had me a little bit on the edge. I was very cautious this morning, and I tweeted before the market opening that the pop in the morning will likely be sold off a little bit for profit takers. And really the judgment here for the buy the dip crowd and the bulls to buy the dip and push it higher again, which we saw happen during the market hours. I also tweeted before the market's opening that you need to look at the Zoom's stock. The Beijing headline is a little worrisome because it could signal a shift again to the back to the work at home stocks and coronavirus fears. Zoom stock was down in the pre-market, but it was being bought. The dips were being bought during the pre-market. It opened negative and it closed positive, and I said watch Zoom stock. If the dip is bought in Zoom stock, the market will reverse. And as the dip was bought in Zoom stock and Zoom started to rally, the stock market started to lose the pop from the morning. I actually put my money where my mouth is, and I entered early in the morning in a Zoom trade, bought the 240 calls for $520, and I sold them just about an hour or so later for $800. That's a quick 300 or so, a little less than $300 in less than an hour work. It's not bad. And the reason why I believe that the dip will be bought in Zoom stock is the coronavirus headlines from Beijing. So let's take a look at today's action. 15-minute chart. We pop in the morning. Here's the pop. And then comes the profit taking, as I explained in my tweet. And the reason why it was triggered, it was because Jerome Powell, the Federal Reserve chairman, started speaking. And every time this guy speaks, it's not a good news for the stock market. And I actually put up a tweet that Jerome Powell jinxed the market every time he speaks, well before, 15 minutes before he actually started speaking. And what do you know? the market sold off as soon as he started speaking because he said this.
Use it.
So we're not actually increasing the dollar volume of things we're buying. We're just shifting away from ETFs toward this other form of index. And as we've said, and if you look at the FAQs, frequently asked questions we published associated with this change, it's really going to depend on the level of market function. If market function continues to improve, then we're happy to slow or even stop the purchases.
So keep that in mind. Jerome is saying that, hey, if the market functions well and it recovers by action of investors themselves and market participants, then they're probably going to put their foot off the gas pedal and slow down. However, the dilemma in the market is that people already bought stocks and bonds and pushed them all, sometimes to all-time highs, on the hope that they will sell them back to the Federal Reserve. Now, the Fed is in really tough position here, and I'll let Jerome speak for himself.
What's the exit strategy on this?
So I certainly hope it doesn't have those negative effects you mentioned. This is something we said we would do at the beginning, and you pointed out that markets reacted very strongly to the announcement. That's because they believe that we'll do what we say we're going to do. So one reason, I wouldn't say it's the main reason, one reason is, though, we feel that we need to follow through and do what we said we were going to do.
So if the market recovered on the psychology alone that the Fed has our back and the Fed will buy from our hands at higher prices, but the Fed is not actually buying, when does that disconnect actually come to a realization in the market? The Fed is not stupid. The Fed will not buy at all-time highs when the market already recovered. The Fed expect to collect on the liquidity it's flooding the market with. The Fed is waiting for a dip to enter the market again. So all the people who are buying bonds and buying stocks, and they're saying, hey, the Fed is going to buy it back, the Fed, they're going to do this, the Fed that. Be careful what you wish for, because the Fed isn't stupid. They will buy, they'll put their money where their mouth is, but they will wait for a better entry opportunity. So buy the dip crowd came back again after the Powell dip, and they bought the Powell dip, pushed it all the way. It didn't go all the way to the highs of the day, but it closed positive. It remains positive activity, but it's still inconclusive. They could have, if they were really aggressive, they could have pushed it above the highs, but they didn't. And that in itself is inconclusive. We cannot say, hey, it's bullish for tomorrow or it's bearish. We need to look at other things. So my mind goes immediately to the dollar index, and you see that the dollar index closed positive today. There was buying in the dollar, meaning more demand, meaning people are raising cash. That's negative for the stock market, but it's not a big move. It's not anything to worry about right now. It's just to keep in mind that the dollar index closed positive, and why is it that investors are raising cash right now? Specifically if they believe that the stock market will hit all-time highs soon. Then I'm looking at the TLT, tracking the bond prices. And bond prices fell down today, meaning that people actually sold their bonds, or there's a little bit of selling in the bond market. And that is positive for the stock market, because cash got to go somewhere, and it usually goes to the stock market out of the bond market. But look at where we are. We made a bottom here, went all the way up. We're just consolidating. We're not collapsing. So is there any more buying to come in the bond market, pushing the TLT higher and therefore taking that liquidity off the stock market and pushing it lower? It remains to be seen. And here's the VIX chart. The VIX closed negative, not by a lot for the VIX, just down about 2%. And what I see, and the reason why I bought in the morning today, bought the dip in the VIX, because I maintain this look. I maintain that this is a pop. a consolidation, and there's another bigger pop coming in the VIX. Now let's take a look at the garbage stocks, the airlines, casinos, cruises, see what happened. I told you yesterday, when these stocks pop short the rip, okay, they're just being pushed by day traders, by gamblers who have no clue what they're doing. They're just buying stuff that is cheap, trading it up and down, making money in the short term. But here's the thing. Immediately, a reversal from today's opening. We go down and consolidate here in what it looks like a bear flag. This is American Airlines stock. And take a look at the cruises. Norwegian Cruises is being clobbered after hours because now they're saying, hey, we might not start sailing cruises till after September. Okay. So all the gamblers and the speculators who said, oh, betting on cruises, because cruises is going to recover, everybody's going to go on cruises. Well, there's some bad news for you. I also bought some puts at the market opening on Wynn Resorts, casinos, the casinos again. And look at this. This is a 15-minute chart on Wynn Resorts. It opens and immediately gets sold off. Consolidates a little bit, sell off again, and it's consolidating for another move lower. Speculators are betting on these stocks, and if these stocks were not doing good during the best economy we've had, during the highest volume of travelers to Las Vegas and to Macau, you really think they're going to do better now? You're betting on them based on what? There is no thesis there. So I'll leave you with this clip, again, a reminder of what Jerome Powell said. Listen to it carefully.
What's the exit strategy on this?
So I certainly hope it doesn't have those negative effects you mentioned. This is something we said we would do at the beginning. And you pointed out that markets reacted very strongly to the announcement. That's because they believe that we'll do what we say we're going to do. So one reason, I wouldn't say it's the main reason. One reason is, though, we feel that we need to follow through and do what we said we were going to do. So
the market recovered based on mere psychology that the Fed has our back. Jerome Powell says, yeah, we got your back. We're going to buy bonds. We're going to buy all the ETFs that tracks the bonds, therefore the stocks of companies. However, they're not going to do it when the market is already at all-time highs, specifically a lot of stocks, all-time highs. They will wait for a better entry into the bond market. So be careful, because when holders, people who bought the hype that the Fed will have our backing, they keep buying and buying and buying, hoping to sell to the Fed for higher prices. When they realize that, hey, the Fed is not going to buy at these prices, you're going to see panic selling, and then the Fed will enter to rescue the market. And this is why, the main reason why I remain bearish for now. If you like this video, please subscribe, share, and like. And don't forget to follow me on Twitter.